Yeah. Good morning, I'm Catherine Ross at TheStreet here with Jim Cramer at the NYSE.
Well, that's cinema verite to be able to do things. You're kind of getting like me when we have money words. We don't know what's going on, but the show goes on, that's we know.
Exactly. All right, so you just ran upstairs to see Dr. Fisher.
Yes.
How is he?
Okay, Dr. Stanley Fisher is an idol of mine. His family, by the way, was transported, by offer from Poland down all the way down to Rhodesia by Rhodes, who sees the Rhodes, who said, listen, we need some merchants, we need people who know how to run a business, and his family came down, he's a man of the world. Central banker in Israel, was our vice chair, and he said, all that happens when he said, oh, Jim, good to see you. All that ever happens, people ask me, well, what do you think of the Fed? And what do you think of rates are going to be? And and he said, you know what, I hate those questions. And it was like, oh, okay, how you doing? And then I had to pivot, of course, to some of the great history that he's taught me. But yes, I mean, everyone wants to know, what do you think of this Fed? And Catherine, I've got to tell you, I've pronounced how I feel, which is that it is the difference from Janet Yellen's Fed. And when you see something like, and I have to address this because we don't hide from it, from a Textron, not Danner, by the way, it's very good. When you see some of these companies that are saying things are wrong, have gone wrong, some of it is because of a slowing economy. I mean, some of these banks. And I think Stanley Fisher uniquely, and this is where I would put words in his mouth, but I don't mean to, he was not against full employment. The Janet Yellen Fed, in retrospect, was a Fed that wanted to look at the data and take action accordingly. This Fed doesn't think it needs to look at the data. It sees full employment and then prophesies negatives. And I think that Stanley Fisher was always more thoughtful in that. That's the way I'll leave it.
What are your thoughts on this market? I won't ask about the Fed.
Well, you know what? I go back to what Mark Sebastian, one of our greatest writers for Real Money, said. Look, Jim, we had the spike in the VIX, and then it started going down while the market was going up. But do not think, this was after the Tuesday rally, do not think that we're going to go straight up. As a matter of fact, it's more likely that we retest. Well, got to tell you, Catherine, we're getting close to retest territory. And today's a very dispiriting day because you take something like Activision Blizzard doing incredibly well, and the stock is just being crushed. It's been a great secular theme of gaming. You take a look at Nucor, principal beneficiary of the tariffs, getting crushed on a decent earnings. We sold that stock much higher. That was good. We did not sell Textron much higher. We sold some, but that was bad. And what you're seeing is a much more treacherous earnings season, and that's what I had been concerned about. And certainly never wanted one of our stocks to be part of the treachery. But it is a moment where everyone is trying to figure out whether this is the last good quarter. And that's going to be a theme for my conference call at 11:30, that the last good quarter is really what people are focused on. And I think it's wrong because ultimately I think the Fed blinks. That was something in our excellent panel that you were at on Saturday. You heard some Ed Yardeni talking about, look, this is I don't know how many, he said 60 pauses in the bull market. It's one of those. But every time you get a pause in the bull market, they all feel like it's the end of the bull market. In the same way that people felt, and I tried to correct courses last night, and also in Real Money, that it's the end of FANG. The capitalism is more dynamic than that.
You had some great insights in your Real Money piece this morning, where you talked about how the Fed is killing regional banks.
Yes.
And I just want to talk a little bit more about that because that's something that I hadn't realized, and I'm sure that people hadn't realized.
I mean, we sold Key at, 2021, based on the fact that people said, you know what, we got to be in domestic banks. They're not going to be affected by China. But they are being affected by low interest rates on the long end and higher interest rates in the short end, which is causing them to start paying more for your deposit. JP Morgan pays not as much for your deposit as a First National, Tennessee, First Horizon. And what worries me here is that whole thesis, other than U.S. Bancorp, the whole thesis seems to be awry. And the domestic slowing down, it started with PNC last Friday, getting 2% growth, and that is a deceleration. Whereas Goldman, I think you could argue, is an acceleration. It'll be an excellent interview, by the way, with Wilf Will Frost, my partner, talking to Mr. Solomon from Goldman. But the move is back to international and the volatility. And that is, again, has to do, even though no one, the president has been so vociferous about the Fed that no banker wants to come out and say, I agree with the president. So people are very reluctant to criticize Jay Powell. But I think that the role of the Fed has been to break this economy. They're going to do another hike in December to further break it. And then they should pause. And the regional banks, I think, will continue to go down to where their yields are big, given the fact that they've indicated we're not pausing.
This is something that I'm really interested in, and you've talked a little bit about this in previous videos with me, but do you think that the Fed is remaining hawkish because of President Trump's comments? Does that have anything to do with it?
Catherine, I think that the Fed is in a box. The president put him in the box because the president is treating it as a reality TV show, which I'm not happy with at all. Also, I think that this is a classic Republican hawk. And his team is a classic Republican hawks versus Janet Yellen, which didn't necessarily mean that she was easy. It just meant that the data indicated she'd be easy. And I think that the president would have been much more comfortable in retrospect with Janet Yellen, but he's a mercurial man. And mercurial and arbitrary and capricious is how he's dealing with the Fed. And that makes Jay Powell wanting to be certainly more, much less likely to want to bend to the president. So that's a very, very big issue, and I'm very concerned. It's what makes me not be able to say bye. I'm feeling, Catherine, feeling very torn about it. I think Mr. Powell is a very good man. I think that he sees inflation as an anathema. I think he believes that the consequence of full employment is inflation. I don't think he follows the digitization of America and how close we are to having 3 million checkers be thrown out, how close we are to having autonomous driving and what that will do for the economy, how close we are toward the cloud companies really sucking up jobs that would normally, when you hire Salesforce, what you're doing is replacing people with software. And I don't think that the Fed thinks about those things. We need a younger person on the Fed who recognizes the change as it's happening. And when you get a Mark Benioff who believes that business is the best way to make things great, but then you look at his products are fabulous, but they're about using fewer people. And so I think that the capitalism's dynamism is going to overrun what the Fed wants to do. Gary Cohn, who's going to be on 12 o'clock on Scott Wapner's show, was the first man that I've heard to actually articulate. Obviously, he was bounced by the president, but and it was really, I think, much more about Charlottesville than it was about policy. But it's he used to talk about how, listen, we have to be very careful of being too harsh on inflation because digitization is going to wipe out so many jobs. Think about this: the fourth industrial revolution, which is something that Mark Benioff talks all the time about. The whole consequence of that is there's going to be too much unemployment. And yet here we are worried about a war that's very much like the First World War, when the Second World War awaits, that could really hurt employment.
That's a lot to think about.
Well, look, these are free videos, but I'm trying, this is not a place for sound bites, and nor is my conference call that we'll be doing from 11:30 to 12:30. We'll address some very serious concerns, but we're really talking about stocks that have pulled back.
Yeah, and these are serious concerns that everyone should be thinking about. I mean, the Fed is not, it controls the economy in a sense.
Right now, what I would say is that it is tariffs and the Fed are undermining confidence, and the challenge of finding employees is a real concern. I mean, now look, I had a dinner with my wife last night, Lisa, and we're trying to get Longshoreman, our restaurant in Columbia Heights, that's right on the docks. That's why we call it Longshoreman. We're trying to staff, and it is proving to be far more of a challenge than when we opened Bar San Miguel 5 years ago. It just is, and it's not so much wages; they do matter. We're able, fortunately, to absorb that, but just the dearth of people. And but again, I would say that it's pockets. It's pockets. New York is particularly hard, but. I'm sensitive to what Jay Powell's thinking, but I'm also sensitive to what lays ahead, not just what's happening.
Yeah, it'll be about the future minutes.
Yes. Well, what it'll really be, I think, Catherine, is that did they see the fourth industrial revolution happening? Because when I go out to San Francisco 4 times a year to understand the fourth industrial revolution, and I go out to try to stay young, frankly.
Can you explain that a little bit more, what the fourth industrial revolution is?
The industrial revolution is the notion of, it's kind of like the loom versus the seamstress. The notion of the digitization and the web, the cloud, and what it means for a system that required a lot of people that doesn't anymore. It's part of Workday, Viva last night. One of the commonalities that I often tell my wife is, when she asks me what it all means, I say, clerical. It gets rid of clerical. The idea is that you have this, so you do not need a secretary. And that is, when you think about the workforce, another whole group of people who would be laid off, not unlike the manufacturing that left to go to China. So I'm cognizant of it, because when I go out there, everyone just keeps explaining to me. And I don't blame people for not understanding the fourth industrial revolution, unless it's in your face. But if you really want to know, let's say you're watching this video and you say, okay, well, listen, that's not good enough, Cramer. I want you to go to Mark Benioff's keynote at Davos. And that's where he really lays it out, and that's what I've gotten it from.
I'm going to have to check that out.
I really do want to check that, Catherine. I find that younger people live it. Older people like me have passed it. In other words, I am at a point in life where the fourth industrial revolution was something that it has come after me. You're in the thick of it. You got to know it.
Yeah, I completely agree with that. So before we wrap up the video for today, because you have got to get back to the office to prepare for your AAP call, I want to ask a Twitter question.
Yeah, I'm writing the top now. I used to write it 4,000 words in the middle of the night, and then the last 2 times that I did my call, I had to rip it up. So this time I'm going to make it as appropriate as I can to what's happening at this moment. That's why people should come in and trial it. It's a very exciting thing. It's the antithesis to what you get for your mutual fund from your broker or from your hedge fund manager. And there's a lot of humility in it. Humility. I am going to talk about some mistakes that I've made. I've made some good ones. You can't talk about those unless you talk about the mistakes. I'm sorry, go ahead. I didn't mean to interrupt.
It's okay. Okay, so I have a Twitter user who's curious about the AT&T HBO streaming service and whether or not that will impact Netflix.
Okay, one of the things that's so great about Reed Hastings, and you can't idolize people. I said that to Stanley Fisher. But he has said over and over again, please bring those on. And it's very, it's antithetical to people think, but he just believes that the more you stream, the more people who have not streamed, the more product that you have, like a Roku situation, the more likely you are to subscribe. So he's talking about a virtuous circle. Now, no matter what he does, people just say, no, it's got to be zero sum. But, Reed is so smart, I'm going with Reed. One of the commonalities that I have with some people in business, but not in stocks, is that we'll talk, and you'll be with executives, and I'll say, who do you idolize? Who do you think's great? And it's invariably Reed's name comes up. So he did forecast poorly about how good this quarter was, but you know what? I will not fault a guy for having a dramatic underestimation of how good he's doing.
I gotta agree with that. I mean, it's always better to have more positivity than negativity.
Yes, and the Netflix show that you talked about turned out to be far more popular but only with millennials. I started asking, none of people my age knew it, but every millennial, and I have a huge number that work with me on Mad Money, they all watch it.
Yeah.
Good call.
And that Netflix show is Big Mouth, which is John Mulaney and Nick Kroll's show. It's great.
Well, it was mentioned I went back over the release, and it was one that he mentioned made a difference. So thank you for enlightening us. This is one of the reasons why I enjoy working with you, because there are many things I miss. The last comment I have on it, there's a woman by the name of Amy Chang, my wife's become friendly with. Amy had her company bought by Chuck Robbins at Cisco, who's doing such a great job. We met Amy at a dinner that Mark Benioff threw, but she is the youngest person on the Proctor board. And when David Taylor was in that proxy fight with Nelson Peltz, he came to my office and he said, you know what, we have Amy Chang on the board. And I looked up Amy Chang, another one of these people, computer science genius. I mean, obvious, like ridiculously smart, Stanford. And she knew more about what the person who runs the house needed than anyone at Procter. And that's why I'm so glad to do videos with you.
Oh, why, thank you.
Yep.
All right, y'all, he's got to get ready for his AAP video, and you can trial Action Alerts Plus and watch
would be on
it.
the call. I mean, maybe you can trial it after the call and a replay, because we're not going to give away as much as we used to. We have to close that down. But suffice it to say, I always say it's about 30 man-hours.
Thank you for joining me.
Thank you, Catherine.
I'm Catherine Ross of TheStreet. I will see you guys tomorrow.